incrementally better, and that's the reason that stock is holding with a gain of around 7%. UTIMC, DLF, HPCL, CDSL, Shriram Finance, these are some of your other big gainers which are reacting to a good set of earnings. But Praj Industries is in focus for a similar reason. Mrs. Shishir Joshipura, the MD and CEO at Praj Industries, is joining us on the show to talk to us about their earnings. Hi, Mr. Joshipura. Good to be speaking with you. Thanks so much for making time and speaking with us. And Diwali greetings from the ET family. To begin with, I wanted to understand about the order inflows. Now, while they are steady and they have come in at 921 crore this quarter, it's below the range of around 1100 crores that we have been seeing from you from past many quarters. Is there a delay in decision making? Is there a timing issue? Or the pipeline still is healthy? What would be your word on the order inflow trajectory?
Good morning. Good morning to you and your viewers, and a very, very good wishes for the Diwali. As you said, we have seen peaks of around 1100 crores in our order booking, but if you actually go to see, this is the quarter we actually turned the trend. Over the last 3 quarters or so, we were continuously coming down on our order book, but this time we have reversed the trend. In terms of our pipeline, it continues to remain extremely healthy. We have absolutely no hesitation in saying that we have a very, very healthy pipeline of order books. It has been a little bit of a timing issue, especially with the engineering businesses, because they are large value contracts. But we are very, very confident. The world is still pushing decarbonizing as an agenda. The modernization is a very, very strong theme with engineering business. We see absolutely no reason to be concerned.
So are you likely to make up what has been the sluggishness in Q1, the first half of this year?
When we had started to speak, so let me backtrack a little bit. As we are all aware, last 1 year has seen a major change in policy, which was then, of course, changed again for the bioenergy segment, especially in India, where the feedstocks for ethanol, especially from the sugar sectors, were restricted, even some restrictions on the starchy feedstocks. These restrictions have now been reversed. However, we don't see the effect of that yet, because I think they have just been reversed, so project will probably start to kick in as we move forward. That's one dimension. Overall, we expect, as I was mentioning, very, very healthy pipeline of inquiries and progress of dialogues. And we are very confident that as we move through the year, we will actually see a much stronger performance.
Number north of 3,500 to 4,000 for the full year for top line? Will that be a reasonable assumption on our part?
Well, we don't give a guideline of sorts to provide a guidance for our future quarters. But if you look at the way our order book is already in excess of 4,000 crores. So it will not be completely out of line to think like that.
Completely out of line to think about a 3,500, 4,000 crore top line for this year. But what kind of margins will it come with? And I ask you that because this quarter the margins have declined to 10.5% thereabouts. When do you expect to go back to 12, 13%? By the end of the year, in second half?
Well, there are two things that we need to understand. One, as a strategy, we have stated that we will start doing 2 or 3 things very differently from what we have been doing in past. Number one, we are wanting to increase the share of international sales in our overall portfolio. And there's a stated guideline that by 2030, we want to actually move from 18% to 50% into our portfolio. So that's one big shift. International orders are at a better margin, number one. Number two, we have started to grow services as a business in our portfolio. In fact, this quarter saw them coming in with very strong performance. So services is another one where you obviously have a better margin into your overall business mix. That's the second one. Third, we are very strong that as we move forward with the decarbonizing agenda and with the new innovative solutions that we have come up with, we will be in a position to actually start delivering values to our customers. Just to give an example, let's say starch-based plants in India. There have been several, over 100 that have been built in the last 2 years. And customers are now realizing that probably taking corn, processing it to produce ethanol and have one byproduct may not be good enough from a margin perspective, and therefore they are seeking solutions which enhances value for them. And our technology team has worked on several solutions that actually help them to extract much more from the same input of feedstock. And I think this is going to be a trend where technology will start to play a bigger role. And when that happens, I think we will be in a very good position.
In your press release, you've talked about slower pace of execution impacting Q2 earnings. A, what led to this slower execution, if there's any specific issue? And in the second half of the year, are you expecting a material improvement then?
So if you see our mix so far, as I said, we're shifting our mix in favor of a higher share of international business. But the order book that is coming in from previous year, and not in this year, but from the previous year, is still dominated by domestic order book. And there is a clear stress on liquidity in the domestic market. We've also seen some imbalances that have happened because of the geopolitical tensions across the world. We see as the liquidity situation eases, as the US elections settle down, I think we will be in a position to see a more stable environment in which, obviously, if it's a stable environment, we'll be able to overcome some of these external factors, which will start to speed up the progress of the execution of the jobs. In India specifically, the freeing up of the feedstocks we expect will start to play an impactful role starting from next quarter, not this quarter, but from next quarter.
You know, Praj has always been a specialized engineering company, but for a specialized engineering company which has a bit of IP, you've got technology which in a sense is proprietary, your margins, they are always in and around 10-11%. In next couple of quarters, can there be a frog leap in your margins because of the new technology and other changes which you're doing? Can your margin decisively move from 10 to 12 to 12 to 14 and 14 to 16?
Well, not for me to hold a crystal ball here, but if you really look at the way our investments have progressed in this year, we have made a very massive commitment to setting up the facility at Mangalore under our subsidiary Praj Genex. Now, when we set up a facility of that size, it's almost a 12-month period in which you keep investing. And at the end of 12 months, you start getting returns from that shop, and it doesn't start at 100%. It's not a 0-100 situation. So it gradually builds up. We are right now in a situation where our Genex facility is built. The nature of the customers there is that they all are very large multinationals. They have their own approval processes. We are going through that approval. We already have received approval from 4 of these large companies, and more are underway. It's a strategy that we have followed so that we are able to leverage that as we move to the next financial year in a very, very certain and a strong way. Unless we show the capacity and capability to build systems, we are not getting contracts from these customers. They will say, yeah, show me, and then you get one. And now we have approvals from 4. So we'll start to see movement in the engineering order book, and subsequent periods, maybe in the next financial year, of the impact that Genex will play. That is also showing up on our margins this year because all the expenses are going booked and getting on the ground this year, but we are not getting any revenue commensurate with those expenses. So as we move forward, we will see these change as well. So that's one dimension on the margin side. Overall, if you see, we have spoken about the fact that we have started a journey where we will constantly keep improving our margins. And I think as far as that is concerned, if you see over the last 8 quarters or so, we have been on that track.
Okay, you have been on track. Thanks, Mr. Joshipura.